Good morning, ladies and gentlemen, traders around the globe. We from Admiral Markets say hello and welcome to our real-time daily trading idea webinar. 5 days, 5 traders, so we would like to stream the markets here today, discuss the topics of today, and for sure here answering your questions. But first of all, you see here our risk disclaimer. So be aware that Forex and CFDs are leveraged products and can result in losses that exceed your deposit. So there may not be subtitle for everyone, and please be aware that all we are showing and presenting here is just a personal opinion of our traders and not an advice for investing. So here you have a picture from me. My name is Tim Temp. So I'm a sales guy here from Germany. So yeah, my English is made in Germany, but my quality too. So, and we have here some pictures from our traders. So as I said at the beginning, 5 days, 5 traders. So today is here with Paul, and we will hear Paul here in a couple of seconds and more about his trading style. So, but here we have a quick overview before Paul is starting some of our offerings you can see here. For example, here our bestseller, the DAX 30, with a typical fixed spread of only 0.8 points during the main trading hours. On the right side, you can see some of our awards here from our customer service. You can contact us if you have additional question or anything. Here you can see our telephone number and as well our email. So this you will find for sure on our website too. So yeah, and a quick advice here, this is a live trading session and we will record this and later you can find it on our YouTube channel. So that's it for my part. So I say good morning, Paul. You have the screen and you can start.
Good morning, everybody. Good morning, Tim. Thank you for the introduction. Hello, everyone. It's Tuesday, 12th of June already, and I hope you can hear my voice. I hope you can see my screen. Well, we're only Tuesday. It's already been a rather eventful week the last couple of days, and the rest of the week is going to be pretty eventful as well. So it gives us an opportunity to have a look at a lot of what's going on in the market, a lot of what's happened, and start to feed that into a possible trade plan for ourselves. So, of course, we had the weekend, all right, where we had the G7 and the how would you describe it? The shenanigans that occurred at the G7 post Trump's departure, and then invariably that flowed into the Singapore summit between Trump and the leader of North Korea, and it appears that that has gone very well. I get the impression that actually that deal was probably done a good while before, and invariably to the sort of summit was a little bit of a kind of a PR opportunity to basically to sort of shake hands, sign paperwork, and commit to something new, all of which could be an absolutely an amazing piece of human history, but also have a knock-on effect to markets. So how does that apply to us? How does that sort of get us of interest? Well, let's just have a look at the Japanese yen. Why am I interested in the Japanese yen? Well, what we see is that, Japanese yen, along with Swiss franc, and I'd also suggest perhaps along with a dollar and an element of gold, have been, used as safe haven currencies in the past. And so, for those of you who are completely new to trading, invariably, capital is a coward. It will run and hide in the safest place possible at the first sign of trouble, and invariably, whenever we've seen might be trouble, that invariably money has flowed into the Japanese yen. So, with that goes on, you'll hear other sort of analysts, traders talk about a risk on or a risk off environment, and the Japanese yen is quite a good proxy for that. So what I have here, this is the Admiral Supreme Edition of MT4, and I have just a yen profile here, okay, and invariably just, probably those of you who joined me before you see it, I have just all the yen pairs set up there. I have Euro yen at the top left, dollar yen, pound yen, Swiss yen. Here along the bottom I've got Aussie yen, Kiwi yen, CAD yen, and also the Nikkei index as well. So the reason I do this is that so I can quickly take a scan of either a currency or an index and just get a view of what is going on with that particular currency. Well, if you look at these, all of these yen pairs, we can see that effectively, for the last couple of days, from yesterday and overnight into this morning, what we have seen is, there has been, it's just been one-way traffic, there, okay? Maybe CAD yen a little bit, but the rest of them, it has been effectively a lovely bump, all right, okay? From we had a sort of sell-off of them into Friday, but then really after the G7, after the Singapore summit, what we have seen is a sell-off of the yen. So what does that tell us? Okay, that tells us that there is a risk-on environment. It tells us that invariably, despite maybe some of the G7 shenanigans, with regards to the Singapore summit, that the vast majority of, let's call it, traders, banks, institutions, humans are, they are of a risk-on mentality, because we believe that there will be peace, a peace of sorts throughout the Korean Peninsula, and that the sort of Japanese Sea of Japan and the sort of South China Sea. All of that is good, and so invariably, the risk is on, which means that people basically start selling their yen positions, and that's why we see that across the yen pairs. So I'd be keeping an eye on that, but hopefully that just gives you a little bit of insight as to how you can use the MT4 platform, and you can use just setting up a currency profile just to give you a very, very quick, broad snapshot of where that market sits in terms of either its risk on or its risk off profile. I'll be keeping an eye on that, and the reason is because we've actually got a week of some really fascinating data coming out. I know we've just had some data come out in Germany of the ZEW survey, and along with that the Euro ZEW survey, which gives us an indication of some economic sentiment. We'll have a look at how that impacts on our trade for the day. But then we also have today, what we also have, and I'll just switch across. We also have we have a vote in the UK on Brexit legislation. And so, I personally would be very wary of trading sterling today, and the reason being that it's because of that vote that is going on. Well, then people will be the market will be skittish, shall we say. It'll probably be very quiet until actually we get some clarity upon that. And once again, how do I use a chart to sort of understand that? Well, very simply, we can look at the euro sterling chart there. Okay, this is a daily chart. You've heard me talking about that 87.50 level for months now. All right, okay, it's it's clear that it's there. But if we look at that for the last 6 weeks, okay, euro sterling has just done nothing really. It's just gone in a little bit of a range between about 8,700 and 8,800. Okay, it's just bouncing about there on a daily chart, and that's because they're waiting to see what A, this legislation, and B, what Theresa May and Barnier's response will be. So the way I look at that is euro sterling is kind of it's coiling up. I can see that the daily 200 is acting as resistance as it squashes it from the north, and then the 50 period, okay, and that 87.50 level have acted as sort of support from the south, and so price is getting coiled up. And so I wouldn't personally be touching sterling until we get some of the resolve or the resolution from that legislation vote, because that will give us an indication of what people will think of, firstly Brexit, secondly the sort of Theresa May government, and then also finally the price of sterling against euro. So as I said, it's another example of just using the charts to give you an idea of what's going on. And one of the good things about being a trader is about being able to pick the areas where you want to trade, but also about being able to sort of find and identify the markets that you maybe want to just give a little bit of a wide berth to, and I would for the next day or so I'd be giving sterling and euro sterling. I would just be watching that. Okay, that would just be watch and shoot and wait and see what occurs on that. But here we go. We're on to the euro pairs here. So let's have a little look at another opportunity to watch and shoot. Okay, we've got FOMC tomorrow night. We've got Draghi speaking on Thursday. Okay, so as I said, it's a week full of really important big pieces of news coming out, which can have an impact upon the markets. But what I'm kind of watching and stalking a little bit, and here we go. We'll have a look at a chart here. This is the Euro Aussie. So for those of you who are new to trading, joining us for the first time, my chart's very simple. It's a green bullish candle, a red bearish candle. I have a blue 20-period simple moving average, a red 50 simple moving average, and a green 200-period simple moving average. I'll also draw in horizontal levels of support resistance where I feel that they are of relevance, and I'll also draw in some patterns. So this is the weekly chart on the Euro Aussie, and you can see that for pretty much from about February of last year through till about April of this year, it was just one-way traffic, and that was quite a simple trade because we basically had euro strength and we had Aussie dollar weakness, and you'll have heard of me talk about that before. We basically ran up to around about the 160 level. We put in there a nice double top formation. Okay, I'll just put my we go. We'll put in a nice double top formation, a bit of a 1-2-3 formation, is just a pattern I like to trade. And then we had a bit of a sell-off, all right? We had effectively, that was part of the big sell-off of both euro and sterling that we've seen. As we've seen dollar strength the last 2 months, we also saw euro and sterling weakness as they collapsed towards the sort of bottom of the ladder. But what I'm intrigued to see is, we ran down into the 50-period moving average, and then last week we put in it's a bullish engulfing candle. Okay, it's a bullish pin bar of a sort. I'd prefer to have a smaller wick to the top, but we've ran into that area. Okay, and that starts to get me interested and look at, well, has the Euro Aussie selling been overdone? Is there a case that we might get a little bit of a retrace here? Okay, a little bit of a bounce back up to maybe that sort of 157 area. So then I start to have a little bit of a look down through the time scales. If I go to the daily chart, well, here we are. We're beneath the daily 200, but when I look at this price action here, I think this is quite scrappy price action. There's nothing really sort of getting me too excited there. There's wicks to the sort of the top and the bottom, and I'm kind of just starting to have I'd be a little bit wary of that. But then if I go down to the 4-hour chart, this is where I start to get a little bit interested. So not only do I try to give you a trade idea for the day, but I also give you let's come and say like a bigger picture. What I kind of like to think of almost like a watch and shoot opportunity. All right, it's just something that hasn't playing out today, but may play out over the next few days as more data and news comes into the market. When I see this here, okay, this is the 4-hour chart of the Euro Aussie. I'm intrigued. We had a nice double bottom there. Okay, we've had a little nice rally up there, which we got finished by this bearish engulfing candle. And what I'm actually interested to see now is will price maybe drift down? Okay, will price drift down? Maybe back down to around about that 154 area. Okay, 154 would be of interest to me. Why would that be one interest? Well, because if price, and I'll just draw it in here, if price comes down towards that sort of zone there, well then, what I see as having then is, then we start to build a inverse head and shoulders, and that's something that could be of interest to me. I like to trade head and shoulders patterns as a reversal pattern. I'll just draw this on for those of you who are completely joining us. Just 1 second. Let's just amend that. Hopefully you'll be able to sort of give you a little bit of an idea of a picture of it. And so that's what I'm looking at. So this is a case of like, as I said, almost like a watch and shoot, all right? I'm just waiting for price to sort of just maneuver itself down to that area. And if it does, well then, then I'll be looking to take an opportunity for a long sort of a long Euro Aussie trade, okay? If it comes down and fulfills my scenario, and that's what I'll very often do in the bigger picture. I will have a scenario like this, look at it, see what happens. If a trade plays, the trade goes on. If it doesn't, well then I just move on. But what I'll be looking for is, I'll be looking there around to be a buyer approximately around the 154 area. My stops beneath these recent lows, which is about 153, 152.90, and then I'd be looking to target, the kind of that 157 level with just, my first sort of point of inflection around about that 156.20 mark, 156.20, where that 4-hour 200 period moving average is. So that's a bit of a longer trade, as I said, a bit of a watch and shoot. There's something just to keep an eye on over the remainder of the week. Let's have a little chat about the DAX, okay, as a trade for today. So those of you who joined me last week, where were we? Those of you who joined me last week, here we are last Tuesday. Let's put the market on. And what we talked about last Tuesday was, we saw price rallying up here. I talked about we had a little inside bar, and then I was looking to trade the breakout of that with the stop beneath it with a rally up to around about this 12,900 level and zone, which is proved to be particularly interesting as a level of resistance. And we can see, that trade worked very nicely, got back up to that 12,900 level, and then it fell away. Then it's actually come back up again a couple of times during the week and fell away. And then this morning, we tried to push up, but actually we got battered all the way back down there. And I'm kind of intrigued that this, excuse me, is, this is quite a big sort of, this is a key reversal candle to me. It's a bearish engulfing candle at that kind of level, at a level that we've rejected before. So I start to get interested, and I put a little trade on this earlier, just in front of the news, just in front of us going on. What I'm looking at is, what I trade there is, I'm looking around about a kind of a short there, around about the 12,900, 12,905 area, with my stop above the highs at around about 12,955, 12,960, and with a target down towards about that 12,700. So effectively, I'm risking about 55 pips for about 200 pips of possible profit. So that works out at about 3.6 R trade. Okay, those of you who know me know I like to take asymmetric reward to risk ratios. Okay, if I'm going to risk 100 euros, I want to be looking to make 200, 300, 400 euros. That's the way I like to trade. That means I don't have to be right on every single trade, and that to me takes the pressure off me in terms of having to need to always be right. We as human beings, we have a feeling and a need to be right. So keep an eye on that. There's a little, as I said, a trade for the day idea. I've got a couple of minutes left, so if there's any questions, ladies and gentlemen, what we'll have a little we'll have a little look at. Okay, so we'll just cover that off. It's I don't know if there's any questions there, Tim, that we want to have a little look at.
Yeah, Paul. Some of the questions you already answered. There was some questions about your indicators, but you already told us what kind. But maybe you use simple or exponential moving average.
I use just simple moving averages. Okay, it's what I think is that it's a lot of people get very, very caught up in moving averages, whether it's a simple or an exponential, or whether it's weighted, whether it's offset. Okay, what we realize is, the moving averages, I'm just looking to use them to be perhaps, an indication of, is there a trend? Is that trend a strong trend? And also I find it useful as an area of dynamic support and resistance. So, on something like the 20 period moving average, if you're using a simple or an exponential, if you overlay both of them, there's not always a huge difference between them. Okay, it's not something you need to get absolutely too caught up on. Remember, it's just a simple indication of, is there a trend in place? Is there, what's the strength of that trend, and are there particular areas of dynamic support resistance provided by those moving averages that might provide me with the opportunity for a trade setup? Okay, so I hope that answers that, Tim. Just for the last minute, I noticed there was perhaps a question on the Dow, so I'll do a little quick look on the Dow at the moment.
Yes, Paul. Here we go. Please, some quick view on the Dow Jones.
All right, so here we have Dow on the dollar. Is there anything really? There's not really anything. The only thing of interest on the weekly for me is that I thought perhaps the 20 period moving average here may act as dynamic resistance. Okay, but it hasn't. Last week, we had a real strong breakthrough. Okay, that was a strong week there. Okay, strong end to it. And we've seen that on the daily chart. We've had a little bit of a breakout of there. Okay, it's interesting if you look at the four major indexes for America. So you have, the Dow, the S&P, the Russell, the NASDAQ. The Russell and the NASDAQ have been, hitting all-time highs, but the Dow and the S&P have been lagging and lagging quite considerably. Okay, they've been pretty much the sort of the laggards in terms of those indexes. And the question becomes, is it a case of that the Dow and the S&P are behind and need to catch up with the other indexes, or are the other indices ahead of the game, and that they will fall back towards where the Dow and the S&P will be? Personally, I think that we are still relatively getting good, strong news out of the U.S. economy, and so I think I would be bullish at this moment on the U.S. economy. With regards to the Dow itself, what I'd be looking for is, this is bullish, okay, and I'd be looking to sort of just to buy pullbacks here on the on the Dow as it grinds its way up. For new traders, we never move in a straight line. Price always moves in a zigzag. So if we're bullish, we're above the averages, we're chugging north, well then I'd be looking to be a buyer on pullbacks. Hope that helps, Tim.
Yes, Paul. Thanks for you discussing and showing us here the topics of today and what's going on the markets. So thank you, dear listeners. So yeah, tomorrow we are back at the same time. You are also invited here for our English webinars. So yeah, thanks again, dear Paul and dear listeners. So yeah, you have this last words, Paul. I say goodbye. See you tomorrow, ladies and gentlemen, and yeah, have good trades.
So yeah, thanks for joining us, everybody. Have a great trading week. Remember, there's a lot of big news coming out, so keep your powder dry. Make sure you manage risk. Keep an eye on what goes on, and I wish you the very best of success in your own trading. Trade well, everybody. Goodbye.